Hooty hoo, all my stock market gamblers. Welcome today. It's Wednesday. What do we got going on? Well, the markets are up today. Dow's up about 300. Nasdaq's up over 100. We're in rally mode. But here's the thing. We were up 400 points yesterday on the Dow, and we ended up closing down. Look it. We've been oversold in this market. We had that rally up, and then we gave it all back, and we're retesting the June lows. We're right where we were back in June. The SPY came down to the exact point of the June low. And now I think we're going to get a relief rally going up. Now, do I think we're going to go lower? I think it's very possible we come back and test the 200 week on the SPY. The 200 week's at about 350. Right now we're at about 367. But a relief rally from here before we come down to that 200 week. All right, so now why do I think this? Well, I look at the VIX. Now, if you know what Bollinger Bands are, they're two bands, one on each side of the moving average, and they're two deviations from the moving average. Well, these explode higher as volatility goes up. Now, the VIX, when you get in an oversold market, we closed above the high of the top Bollinger Band. Okay, now that happened on Friday. Now we stayed there Monday and Tuesday, stayed above it. But today it looks like we're going to close back in that Bollinger Band range. Now when we do that, that means that volatility is coming in, and that means that the market is going to rally. So I think a relief rally is due. Now, there's only about an 80% chance that that's going to happen, but I do bet on the odds, and the odds are 80% chance we're going to get a relief rally. We had one yesterday, gave it all up. We got a little rally going today. We'll see if that holds on. Hopefully it does. I think it will. I think we're going to get the relief rally, but I do think we're still at risk of going lower down to the 200-week moving average. All right, let's move on to the housing market. Now, the housing market, you just can't make this stuff up. You know, if you watched mainstream media, if you read the mainstream articles, you would think we're in this massive housing boom. I'm telling you, look it. Okay, so anyways, here was the headline. House prices substantially higher. Headline number one. Headline number two. New home sales unexpectedly boom. New home sales unexpectedly boom. Consumer sentiment is exploding higher. You would think that these are the best of times. Look at mortgage rates just hit 7% yesterday. Now they pulled back a little today, but we did hit 7%. And I think this time next year we're going to be sitting around 10%. Now, you know, I mean, that's a conservative estimate. Maybe, look, mortgage rates went from below 3%, and now we're at 7%. That's more than double, and it did that in 8 months' time. So this time next year, I say we're going to be at 10%. People, oh no, we could never be at 10%. Well, I think we can, and you know, it's possible we could be a lot higher than 10%. Okay, now a lot of people don't like to hear that, but real estate is in a grind. It's in a slow grind right now. Houses aren't selling. That's because the buyers don't want to pay what the sellers are asking. Sellers are still asking high prices because they want to get what Billy Bob got. And everybody wants to get what Billy Bob got, but Billy Bob sold back in January. That's where the prices were still high. Look, once the interest rates went from 3% to 7%, house prices have started to come down. Okay, so let's start with that first article where home prices are substantially higher. What they're looking at is year-over-year comparisons. That's what they're looking at. Look at, yes, they're higher than they were a year ago, but when did the mortgage rates jump? When did that interest rate jump from 3% to 7%? Well, that happened right about February. So in February till now, home prices have gone down, but they don't tell you that. They're telling you that they're much substantially higher year over year. Let me tell you, home prices are falling right now at the fastest rate on record. Now, of course, not in your area. In your area, they're probably still going up. But home prices are falling falling at the fastest rate on record. Okay, so these home prices that they say are substantially higher, and they say that this is not going to crash like it did in 2008, and they give us three reasons why. Okay, only 5% of people right now are taking out adjustable rate mortgages. Okay, well, it's actually jumped from 5 to 10%, but there's 5% over the past 2 years have taken out an adjustable. Okay, so they say that's not a problem. But here's the thing. When rates went from 3% to 7%, people could not refinance. They couldn't refinance anymore, right? Okay, so they weren't able to refinance to get money out of their house to live on. So how did it change? Well, they started doing HELOCs, home equity line of credit. And now some of these, they're going 9 to 13%, as high as 13%. Now, of course, you would only do this if you're desperate, but a lot of people are already desperate because they've been using their house as their piggy bank to live on, and now if they refinance, they're going to lose that 3% mortgage, so they can't refinance because it's now 7%, so they take out these HELOCs at 9 to 13%. Look, that's not good. That's not what the article tells you, though, right? Now, here's what the article tells you also. Okay, lenders are much more disciplined today than they were back in 2008. Now, okay, maybe they're checking the credit scores higher, but here's the thing. There's more loans that are only 5% down. About 80% of loans out there, they only put 5% down on their home. 5% down. Now, okay, look, if you bought a home for $1 million, you put 5% down. You put $50,000 down, right? And you wanted to sell it tomorrow, the day after you bought it. You couldn't sell it at a profit. You couldn't even get your money back. It takes about 6% in fees to sell a house. So you put $50,000 down, well, you're going to lose $60,000, so you'd have to come up with $10,000 more just to get out. Now home prices, what they're doing, they're coming down at the fastest rate on recorded history. They're dropping like a rock. Okay, now what happens to your equity? You've got 5% down and they drop 10, 20%. Well, you're way underwater because it's going to take you another 5 or 6% on top of that to sell. So a lot of these people are just going to be handing them back to the bank. So I don't think lenders are more disciplined like the article talks about. Now, okay, what's this one? This one really gets me. This one gets me. Okay, homeowners are not affected by rising rates because they've already locked in a lower rate. Now, let's say you're a homeowner, right? All right, and let's say you bought back when rates were 3%, and you bought this $1 million home. Now, let's say rates go, well, they're already at 7%, so we'll use 7%. All right, so you bought it at $1 million. Now, you're not affected because rates went from 3% to 7%. You try getting out of that property, and you'll see how affected you are. Look, prices go down as interest rates go up. If you bought that home when rates were 3% and you bought $1 million house, you've already lost 10, maybe 20% of that money is already gone. I would say that affects you a lot. Now, the article says that no, it doesn't affect people that have already bought their house because they're locked in at the low rate. Well, when rates go up, they have no way of getting out. They're okay if they're going to stay. I agree with that. Okay, everything's going to be okay. Your house went from $1 million down to $500,000, you're not affected, right? Because you're going to stay. That is true if you're going to stay. But if you ever plan on moving, you are affected a lot. You really are. But this is what the article's trying to sell you. Now, of course, they have their own agenda. They want to make you think that the market's still good, and they want to sucker some new players into the market before this comes tumbling down. It's tumbling down pretty quick. But here's the one that's really funny. Okay, all right, so new home sales unexpectedly boom. Look at this is on volume now. This is on volume. Okay, so new home sales. These peaked back in April. And they've been coming down. Between well, the prices have been coming down between 10 and 20% down already on new home sales. But what happened? Okay, so the volume came down 60%, right? So they were expecting a bad number to come out again for, well, the September, actually go back to August numbers. Okay, so they were expecting a bad number. They were expecting negative 2% in volume of new home sales, and it unexpectedly surprised. It jumped up by 20%. Okay, now that's really good. Okay, now I say that's really good. But here's what they're not telling you. See, I've been around in this game for a while. I'm an older guy. This is not my first rodeo. All right, so new home sales. Let's talk about that. Okay, so you got companies like Lennar. You got companies like Toll Brothers. They build homes. Okay, now to build homes, they have to sell the homes because they don't have a 30-year mortgage. They have short-term financing, 6 months, 12 months, 18 months. They have short-term financing that rolls over. And when they got their financing, it was at 3%, let's say, and now it's at 7%. So they have to roll over their financing. They do not want to carry these houses. They will sell these houses at any price to get rid of them. They have to get rid of them. They're not like the homeowner, the average mom and pop that's waiting to get what Billy Bob down the street got. No, they will get out at the market and they will get underneath the market. Now here's what, okay, let's just take a company like Lennar. Okay, I know Lennar and nothing against them. They're actually one of the smarter ones because they are lowering their prices. They're lowering by 10, 20% depending on the area. Okay, so they lowered the price. Number one, they lowered the price. Yes, okay. So let's say it was $1 million and now they're selling it for $800,000. Okay, now does that help sales? Yes, that helps sales. Okay, number two, they will give you any upgrades that you ask for. If you want a new swimming pool in the backyard, they will put in the new swimming pool. You want the granite countertop, they'll put in the granite countertop. They'll upgrade the house any way they can just to make the sale happen. Okay, that's number two, right? Okay, so we dropped the price and we've given you these upgrades. Now here's the third thing that people don't understand. They're new homes, right? New homes. Okay, so the average rate when you buy an existing home is 7% right now for a mortgage. But these new home builders, they will actually buy that rate down. Not 7%, they'll buy it down to 6 to 5, maybe even down to 4. Okay, they buy it down by paying the bank money, by giving them $30, $40, $50, $60, $70, $80,000 to make that interest rate come down so they can run these ads saying, hey, come and buy this new home. It was $1 million. Now it's $800,000. Don't worry about interest rates. We're going to buy it down for you from 7% down to 4%, but we're only going to do this for a month. And then you get the remaining buyers come in and they buy the properties. And this is why there was a jump in new home sales. Now I tell the average mom and pop person, right? Okay, I go, look you got to do what the new home sales are doing. They're dropping their prices. They're getting underneath the market. They're dumping the homes at fire sale. Look at these new home builders. They're losing money. You can tell that. Just go look at the stock. Go look at the stock of Lennar. Go look at the stock of Toll Brothers. They're not making money selling homes at losses. They're losing money, but they're getting out of the home before it drops farther. And that's what these mom and pops don't understand. I'm just going to sit back and make it a rental until the prices go back up to where Billy Bob sold that, because I know Billy Bob and I want to get the same as him. He's my friend. Well, look you got to lower your price. You got to get under the market to get a sale. You're not going to get what it was back in January. Home prices are falling. This is the first or second inning. It's still coming down. It's got a lot to play out still. 23, not a good year. 2023, not a good year for the housing market. I'm telling you now, real estate people, they're starving, really. Okay, look here's the thing. Sales are down 40% on volume. 40%. All right, so sales have dropped 40%. What about Okay, like refis are down 80%. Here's who's getting laid off, right? Real estate agents. There's no business for them all. There was 2 million. Now, I talked about this back in January, how I knew it was the peak of the housing market, because we hit the peak of the number of real estate agents in the market. That always coincides with the top, and that happened back in January. The most agents we ever had, almost 2 million agents in the United States. That's going to be cut in half. There's going to be 1 million of them unemployed. Will be 1 million left. Okay, now so that gets cut in half, but the jobs are going away. Okay, the mortgage brokers, look at, there's no refi business anymore. The refi business is down 80%, right? Okay, the sales business, it's off 40%, maybe 50%. Now, of course, not in your area. Sales are still happening there, but no, the sales are off. The refis are off. So these mortgage lenders, they're getting laid off, right? All right, what about the escrow officers? Escrow officers, some companies won't make it. A lot of them will go out of business. Why? Because there's no business. There's no closings for refinancing. There's no closing for sales. Look at bankruptcy attorneys. They're really busy right now. You know why? Because they got to handle all these real estate agents that are going bankrupt. They're already declaring bankruptcy. Real estate agents. Now, I am one, so I can talk about them, right? A lot of them live way above a lifestyle than what they should live. Most real estate agents do not make as much money as you think. Do you realize the average income for a real estate agent is about $50,000 a year? That's it. Now, the top dogs, some of them are making $1 million a year. But look at these numbers are going to be chopped in half. The business is going away. They won't all survive. So they go to the bankruptcy attorneys, and then they declare the bankruptcy. Look at, this is bad for the economy. Real estate is, well, it's 60% of the wealth in the world and about 30% of GDP, and it's crashing. And that's bad for the economy. Going to put us in that recession, and that's just the way it's going to play out. All right, well, I got a little long-winded today. Anyways, I'm Tall Mike. If you like this stuff, why not give me that thumbs up? Hey, it's Wednesday. Get out there, everybody, and have a great Wednesday. Bye-bye now.